FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And guys, in this video, let's go ahead and take a look at some of the setups that were available today. There were a ton of setups that were there to trade today. So I hope everyone took advantage of the many setups that were available today that were actually really good setups that had multiple forms of confirmation. So I counted 10 setups that met all of my rule requirements to trade. I didn't take 10 trades, I only took 5. But let's go over all 10 so you can actually see what they were, what the entries was, what the exits of each trade was, and why each trade would have been taken. All right. So without further ado, let's get this started here with the charts. Let's go right up to Euro AUD. And Euro AUD, I'm only looking for buys because we're coming off a peak formation low, and we got this very nice setup. Now, I took this as a trade out of the edge. If you don't know what a trade out of the edge is, I made a video on this. It's in the Trading with Market Makers playlist. But essentially what it is when you get a first leg in Asia, second leg in the London session. So I read this as a trade out of the edge, type 2 pattern. So first leg for me was here, came up for the second leg, which is right here. Now the entry for me on this particular trade setup was basically after this railroad track here. After we get a nice little stop hunt down, we get a railroad track, and then the pullback candle is the actual entry candle. So the entry for me was right here on this pullback. Okay, so 55,460 was the entry for me on this particular trade. The stop loss here was 11 pips. And then as far as take profit goes, since I got a really good entry on this, I was only trying to basically either take it to 2-to-1 risk to reward ratio or to structure, whichever one made sense. So if we look here, we can basically take it to structure, which is the high here of at the very top, which made it a 4-to-1 risk to reward ratio. Obviously, it went much higher than that, but that was my take profit for this particular trade. Now, you had a directional bias, you had the pattern, the timing was correct, the second leg was inside of the box, you had 5 or more candles between the first and second leg, it was pinning to a 200 EMA, you had also the TDI as well made, 2 double bottoms as well. So, I mean, all the confirmations for me were there. You had a good pullback, good risk reward ratio. So it was a no-brainer trade to take. That was one of the trades that I took. Now, second trade was Euro CAD. Euro CAD was pretty simply very standard type 1 trade. You can see we're coming off a peak formation low, so I'm only looking for buys at this moment. So we had a type 1 pattern. You can see here, huge stop hunt run down, and this big bearish candle becomes the first leg. You had 1, 2, 3, 4, 5 legs between the first and the second leg. TDI was super extended as well, so that's also good confirmation. You didn't get a pullback on this one, but that's all right because the risk to reward ratio was still there. So the risk on this one was 13 pips, and then the profit on this was basically taking it up to the 800 EMA because you have the EMAs in your favor. So this turned out to be a over 2.5-to-1 risk to reward ratio on this particular trade. Very simple, nice forms of confirmation with the pattern. The timing was correct. The pullback, you didn't really get too much of a pullback. The TDI. So all that stuff was there. Very good trade. Next trade was Euro NZD. Now this trade I did not take, but it was very similar to essentially the Euro AUD trade where you could have taken it as a trade out of the edge, meaning you could have seen this as the first leg here, the pull up, the pull back down for the second leg, and essentially literally like a very similar setup where you had a big, huge stop hunt candle that ended up being a railroad track followed by a pullback. The main reason I didn't take this trade was that if you look at both of the trades, and so here's something that you should know is when you have two trade setups that are very similar, you have to ask yourself which trade setups look the best because they both might look exactly the same. But to me, when you look at each of these setups, I like the fact that Euro AUD actually was tagging the bottom of the Asian range and also had the 200 EMA going through it. That was way more better confirmation for me than Euro NZD, which didn't necessarily, you didn't see the bodies really at the bottom of the Asian range. You saw them floating midair here and only pinned to the bottom of the Asian range. So for that reason, I didn't take this trade. I took the Euro AUD trade, which is the one that I took. But if you ever come across a situation like that where you see similar patterns or setups developing on two of the pairs that you trade, take a look at them and see which one is better for you. You don't necessarily have to take both of them. One of them is going to end up being presumably probably a better trade setup. But for me, I just took the one that looked better in my eyes when it comes to the type of patterns that I like to see or trade in the market. The next one was Euro JPY. Euro JPY gave us a type 4 pattern here. So basically we had strong movement out of Asia straight down, and then we basically had a pullback to the bottom of the Asian range, and you could see here it pinned to the 50. That's a type 4 pattern here. If we go in and super zoom in here so you can see what I'm talking about. So this right here was the railroad track, right? And then you had a pullback. So on the pullback, essentially, you could have had an entry, right? Now here, and then here's the stop loss goes above the closest high, or the pin bar here, which still is only like 9 pips. You could be literally on the safe side and go 10 pips. It's really not that big of a deal. And then essentially, where are you going to? If you start to look, you don't have really the EMAs in your favor, because if you're just using that, that's not a 2-to-1 risk to reward ratio. So what do you do? Well, if you look to the left, you can use structure, right? And so the structure that I'm talking about essentially is this entire movement sideways from the previous 2 days like this. So essentially, you could just take it down anywhere in this structure here and you would be fine. And you can see the risk to reward ratio is damn near almost 4-to-1. Okay. Now, if you take it on this particular candle, you'd have 1, 2, 3, 4, 5, 6. So 6 candles in, you'd be, obviously headed towards some good profits. You wouldn't have to worry about the 6 candle roll being a factor in this. Okay. So that's one setup. That was one setup here. I did not take this setup. Typically on type 4s, I like to see a more aggressive move and then one pullback here. This aggressive move here wasn't aggressive enough for me to consider taking this particular trade. Now, pound JPY is a trade that I did take because it was my favorite trade to take. It's a type 3 trade on pound JPY. Again, we're coming off of the peak formation high all the way up here. So I'm looking for sells. And so we get one big push here. We get a star pattern here. And it matches exactly with the TDI, exactly what I'm looking for. And you can see the 200. You can see the 800 and the 50 running through price. Now the entry on this particular trade setup for me was right here after the second bearish candle. So after the second bearish candle was my entry here, and then the stop loss goes above the high here. So it was about 16.5 pip risk for me. And then as far as the take profit go, since I couldn't use the EMAs in my favor because of that. So I had to essentially go ahead and use structure, right? So all I did was same thing, look to the left, and you can see the sideways movement happening here. That's the next structure. So that was my take profit anywhere in here. To be exact, my take profit was 155, 200, an even number, right? So it's a 5-to-1 risk to reward ratio on this particular trade for me. Obviously, it freaking rocked all the way down and freaking 280 pips. Like, stupid ridiculous, right? Still got plenty of pips out of it. Um, Still got about 84 pips or so out of it. So I'm not complaining. I'm very, very happy with the trade setup. I don't worry about missing all this. I don't worry about it. Okay, because the trade itself met my requirements. My plan was executed and my plan worked. My trade plan for this trade worked out exactly how I wanted it to. So there's no reason for me to be upset or mad. Okay. The next one was pound USD. Pound USD, same thing, man. Type 3. I love me some Type 3 setups. As you can see here, we're coming off of a peak formation high all the way up from the last week. So I'm only looking for sells anyways. And as you can see, I get a star pattern here on a type 3 pinning to the 50. Also, TDI is pinning to the 50 as well. So that is all good to go for me. The entry for me essentially was after this red candle came a pullback. That pullback candle, as small as it was an entry for me. And then, of course, the stop loss goes right above the pin here. 13 and a half pip stop loss for me. And the same thing, same constant take profit for me. I couldn't use the EMAs, obviously, so I had to use structure. Look to the left, where's the closest structure is anywhere around this area. And essentially, I just took it down to the same thing. 136, 200 was my take profit on this one as well. Close to a 3-to-1 risk to reward ratio. More than happy with that. And like you see, I mean, obviously this thing rocked as well. Over 178 pips, ridiculous. But for me, I'm extremely happy with my, 39, 40 pips or so, and I'm happy with that. All right. So that was Euro AUD, Euro CAD, Pound JPY, Pound USD. And the last setup that I ended up taking was a type 2 on USD JPY. And again, clear and obvious setups. We actually had some divergence here on the TDI. So type 2 setup, again, coming from a peak formation high, I'm only looking for sells. So we get a trade out of the edge. First leg here. Second leg, we get a star pattern. Here is the star pattern here. Big bullish candle, 2 dojis, and then a big bear candle. Some people may call it a different. I call any of this stuff star pattern. I really don't care. As long as it pays my bills, that's all that matters. The entry itself was on the pullback candle, which is this candle here. And so the pullback for me was right there. And my stop loss was really stupid tight stop loss. So it was a 5 pip stop loss. And then on this one, I could use the EMAs in my favor. So I just went to the 200 EMA. Again, four and a half, over 4.5 to 1 risk reward ratio on it. And I'm more than happy with that. So we had divergence here. You can see the first leg here is on the TDI is higher than the second leg, while on the price action, this one's lower, while the second leg is higher. So you do have divergence there. Pattern is there. Timing is correct. second leg pattern, more than 5 candles. I mean, everything is just there. Everything is just there for me to take the trade. So those were my 5 trades that I took, but there still was more trades that you could have possibly had that were really good setups. This happened on USD CAD coming off of peak formation low from the previous week. So we're only looking for buys, type 3 setup, and you end up getting a star pattern here on the type 3. Here's a big bearish candle, 1, 2, 3 dojis, and there's the big bullish candle there. So there's your star pattern for type 3. The setup is essentially this right here. You don't get a pullback on the next candle, so there's no pullback there, but the risk is stupid small anyways, 10 pips. And I mean, you can see this thing ran and it ran. And so for me, if you're looking at this as far as like what is a good take profit point for this particular trade, obviously you can't use the EMAs because they're not in your favor. Just look to the left. Where's structure going to, right? If you go back down to structure, you could easily get a 2-to-1 risk reward ratio, like literally just going to structure like that. That's a 2-to-1 risk reward ratio right there. And then obviously anything after that is, you know, free money. You can also use previous week's high as a take profit as well. And even after that, if you want to, you can go to weekly high as well. So all those areas are there for you to essentially take profit on. But good trade setup on USD CAD. AUD USD had a really good type 4 trade. I wish I would have gotten into this trade, but I just did not want to have too many trades open for me. This is a good example of a type 4 trade that I would have taken, that I look for. A big push down and then a nice pullback that pins to the 50, and you get a railroad track at the very top there with a pullback. Oh my God. Look at that. Your entry is on this pullback here. Stupid small stop loss. And I mean, just literally by going straight down to the yesterday's structure here, it's a 3, 4, you know what, 4, almost a 4-to-1 risk reward ratio. Clearly it goes way more than that. I mean, almost a 10-to-1 risk reward ratio on this one. Ridiculous. Really good trade setup. On type 4s, I don't use a TDI for confirmations, but it's coming off a peak formation high, so the directional bias is correct, the pattern is correct, the 50 is blocking it there, so that's a form of confirmation there. So all the forms are there. NZD USD, very similar setup as well, where was the type 4. This one, I would not have liked this one that as much as AUD USD. You can see why, because you kind of get almost like a second leg to it, which I don't like taking second leg type 4s. I like to get, you know, one-legged type 4s like this one here. But this is still a good viable trade. Essentially, your entry could be right here on this pullback candle, because you end up getting a star pattern here that pins the bottom of the range, and then you get a pullback. So this candle here could be your pullback and your entry candle, and then you can use literally all of the EMAs here. You can use them as a form of resistance for your stop loss. So even if you go right above all of them, it's only a 10 pip risk on this. And so if you look to the left, you have structure that you can take this down to. And I mean, you could take this all the way down, which is basically what it did to previous lows of Tuesday. Okay. But a 2-to-1 risk reward ratio would be like literally right here. And that's it. But really good trade setup, guys, today. I hope you guys took a lot of these trades that I mentioned here. Let me know in the comments, guys, what trades did you take today on this trading day? This is a really good trading. All right, guys, if you have any questions or need any help, of course, join us on FXN Plus. And you guys have a good rest of your week. Be safe tomorrow with trading on NFP.